Hello everyone, welcome to a breakdown on EU. So I'm gonna start off with a weekly time frame first of all to see how I determine my drawn liquidity here and how did I build a higher time frame narrative that eventually led me to taking a trade on the lower time frame, right? So on the weekly time frame, you can see that we've been expecting this range high to be taken since the last few months, right? And now you can see that it finally has been taken, right? Now our objective is to determine what happens next after the drawn liquidity is reached, right? Our objective is to determine two types of drawn liquidity if we want to determine what happens next, right? First of all, we're going to determine a short-term drawn liquidity for where price can go in the short term, and then a long-term drawn liquidity where price could potentially be drawn to after the short-term drawn liquidity is reached or met, right? Now we know that according to market profiles, after a key level is reached or when a significant range high or low is reached, the first thing that we're going to expect straight away is a retracement profile, right? And then that retracement profile is either going to turn into a reversal profile or an expansion profile based on the long-term down liquidity, right? If the long-term down liquidity is lower and we've reached a higher time frame bearish key level, then we're going to straight away expect a reversal profile. But if our long-term down liquidity is higher, then we are currently then we're only going to expect a retracement profile, and after that we're going to expect an expansion profile towards that long-term down liquidity, right? Because we know that the market moves in profiles, right? After an expansion profile, we have a retracement profile before we expand higher again. We know that the market never moves in a straight line higher or lower, right? It always moves in these profiles. It always has these ranging profile or retracement profile in between these expansion profile whenever it's going towards the higher time frame drawn liquidity, right? Now right here you can see that with this expansion profile that we've had since the last few weeks, we took out this range high. Now we know that with this expansion profile we've tested a key level in the form of this range high. Now what we can do is we can expect a retracement profile before we can potentially move higher again. Now the reason why I've said that we're only going to expect a retracement profile is because we know that, and I know that the long-term down liquidity is higher, right? So for now I'm going to expect a retracement profile, and once that retracement profile ends, after that I'm going to expect another expansion profile higher again, right? So after a drawn liquidity is reached, you have two objectives. First of all, you have to determine your long-term drawn liquidity where price is going to be drawn to after the retracement profile is completed. And then you have to determine your short-term drawn liquidity for the retracement profile to determine how deep or long that retracement is going to be, or where that retracement could potentially go to, or where that retracement could potentially end, right? You have to determine that. That is your short-term drawn liquidity. And after that retracement profile ends, your short-term drawn liquidity is reached, then you're gonna enter another expansion profile towards the higher time frame long-term drawn liquidity, right? You have to differentiate between the two types of drawn liquidity. You have the short term and the long term, right? Okay. So if you look at the charts here, you can see that for the long-term drawn liquidity, we can see that we have this range high right here. This is also the 3-month CRT high, right? And currently we're inside the sequence of this 3-month CRT. We finally crossed the 75% of that CRT, right? After taking out this range high, right? Now the next long-term down liquidity for price is to finally take out this range high or this 3-month CRT high. That is our long-term down liquidity where price is going to be inherently drawn to, right? So now you can see that we've determined our long-term down liquidity, right? Which we can expect price to be drawn to after the retracement profile ends. But now we have to determine our short-term drawn liquidity, right? The next thing we have to determine is that we have to determine where the retracement profile is gonna bring price to. Meaning, what is our short-term drawn liquidity where price is gonna be drawn to for the short term before we start moving higher again or before we have an expansion profile again, right? And to answer that, we have to look at this price action right here, right? And you can see that we took out this range high with this particular weekly candle, right? Now the next week we're gonna expect price to at least take out or reach the 50% of this weekly candle, and then eventually the opposing end of this weekly candle. We're going to expect price to at least have a retracement profile, and which price takes out the opposing end of this candle, and that will be our retracement profile, right? If you're looking at the at a daily chart, and on the daily you can see that we've reached a drawn liquidity, or we have taken out a range high or range low. Then you're going to look and see with which particular candle have we taken out, or have we reached the drawn liquidity, and then you're going to take that particular candle, and you're going to take the opposing end of the range of that particular candle as your short term drawn liquidity. Right here on the weekly time frame, you can see that we've taken out a weekly range high. So now we're gonna see with which particular weekly candle have we taken out this range high, and you can see that it's this particular weekly candle. So now our short-term drawn liquidity is going to be, first of all, right, first of all we're gonna expect price to at least take out the 50% of this weekly candle first of all, and then eventually the opposing end of this weekly candle. That would be our short-term drawn liquidity, right? So you can see that on the weekly time frame we did two things. We first of all determined our short-term drawn liquidity for our retracement profile, and then our long-term drawn liquidity. And now you can see that currently we are working with the short-term drawn liquidity, right? Because we haven't reached it yet. So for that reason, we're gonna refine that short-term drawn liquidity even more, and we're gonna look for intraday trades in this particular week in the direction of the higher time frame short-term drawn liquidity, not in the direction of the long-term drawn liquidity, because we still have yet to take out the short-term drawn liquidity. So our objective is going to be to look for intraday trades and look for CRT that positions us in the direction of this short-term drawn liquidity, which is lower, right? Now let's go down to the daily time frame to see what we got there and how did I refine that short-term drawn liquidity even more. So on the daily time frame, you can see that we purged above this range high right here with this price action. You can see that this is the weekly candle high, and on Monday what happened is that we purged above this weekly high, and since then we've been moving lower towards the CRT low, right? And we had a higher time, we had a Monday high of the week weekly profile, right? Because Monday tested a higher time frame key level. So now the rest of the week price is gonna move lower and expand lower and have been a weekly range expansion lower, right? And so you can see that we are nearing the end of the month, right? So now we have another factor to expect a retracement profile, right? Because price is expanding since the start of the month, and had all of this expansion right here, and now only 2 days are left before the monthly candle closes, and based on the open high low close concept, we now have to form the high of the monthly candle. And after the high of the monthly candle is formed, which has been formed here right after this range high was tested, now we can expect the monthly candle to retrace so that it could close lower and resets the whole cycle, right? You can see that the open high low close concept also supports the idea of us having a retracement profile. So we now have multiple factors that are pointing towards the direction of the short-term drawn liquidity, and that are signaling that we can have a retracement profile. So now you can see that we've now built a high time frame narrative, right, on the daily and the weekly time frame, and we've expected price to have a weekly range expansion lower, right? And it's the last 2 days of the month, so we are destined to retrace. And not only that, but it also is inside a Monday half the week weekly profile, right? But now we have to determine where price could be drawn to, right? Meaning where is a particular level for price where price for this particular day on Thursday can expand to, right? And you can see right here we've got this FVG, right? So I took this FVG as my drawn liquidity for this particular day, right? And I started looking for trades on the lower time frame towards the direction of this drawn liquidity, right? So on the weekly and the daily, we've finally determined our drawn liquidity, and we've determined our bias to be bearish. Now our objective is to go down to the 4 hour time frame and look for a CRT there on the 4 hour time frame, and then potentially position ourselves in that particular CRT, right? So let's go down to the 4 hour time frame to see how I positioned myself towards this drawn liquidity. So on the 4 hour, you can see that we started off the weekly candle right here with the Monday price action taking out the weekly CRT high and purging it and testing the key level, right? So based on that factor, we would have expected price to expand lower the rest of the week, and you can see that it actually did that, right? We started off with the order block sequence with this order block entry right here, and then we expanded lower again. Now right here you can see that on Thursday we were right here just above these equal highs and also this drawn liquidity, right? So based on these factors, you can see that we are now in a KOD or kiss update sequence inside this weekly expansion lower, because we've almost taken out these equal lows and reached the drawn liquidity. But before that we had this counter move, and we know that this sort of counter move before the drawn liquidity is reached is called a case of death sequence, and these are the most high probability sequence inside a CRT, right? So based of this fact, what I did is on the 4 hour time frame, I started looking for a candle range or a CRT to be purged before I take an entry here, right? On Thursday, my expectation, what I expect price to expand lower again and off of this KOD sequence, right? So, but obviously, you know that I couldn't take an entry right away, right? First of all, I had to position myself in a CRT or a candle range before taking an entry, right? And if we zoom into this price action right here, you can see that during London Open Zone, we were right here. And on the intraday charts, I expected a normal protraction profile and to position myself in a trade, right? So I wanted to position myself in a trade, and for that reason, I expected a purge above this candle right here before taking an entry, right? And what happened is right at the start of the London Opalkin zone, we purged above this candle, and after that, I started looking for a model one entry. The reason why I chose this particular candle is because I expected a normal protraction profile on the intraday chart. That was the only reason I expected this candle to be purged before I take an entry. My drawn liquidity was pretty clear, and I had already built a perfect narrative for where price would go to. Right now, the only thing I had to wait for is a purge above this 9 p.m. candle or this particular candle, and you can see price then purge that candle, and since that and after that I started looking for a model when entry, and you can imagine how that would have looked, right? I've given you a homework for that, and you've already reverse engineered that, and you know how does a model one entry looks like, right? I basically took my entry at the order block, stop loss above the order block, and my target was the drawn liquidity, the short term drawn liquidity that I determined, right? That was my whole trade. You can see that in all of these trades I'm following a proper logic, right? I start out with the weekly and the daily time frame, determine my own liquidity there, build up a perfect narrative there, and then I go down to the 4 hour time frame to find a CRT there, and I find and select the CRT based off of multiple factors. We're gonna discuss what these factors are. Like you have to consider what sort of intraday profile you have. You have to consider the weekly, short term and long term liquidity. You have to consider higher time frame key levels and all of those stuff before you actually select a CRT. And based off of all of those factors, I select this CRT, and then I position myself there and took a 15-minute intraday entry there and targeted the down liquidity, right?